Hello everyone and welcome to this afternoon's session. I've just been waiting for David to give me the thumbs up that the recording is underway, and he tells me it is, so we are good to go. Okay, very quickly before we start, can I just draw your attention to the disclaimer that's on the screen. It's the usual disclaimer. I know many of you have seen this before, but we do have to repeat it. This can be a very risky business. Please, please don't ever think of using money that you cannot afford to lose. So, right, as I said this morning, those of you who were with us in the mid-morning session, it feels a bit like we're all back at school, because once Labour Day has come and gone, as it was yesterday in the States. And by the way, if you are joining us from the States, I hope you had a lovely, lovely weekend. But it does always feel, it kind of marks that period now. Summer is over and it's back to school, and things, you know, all the silly things that happened during the holidays are now forgotten, and we all have to look forward and see what is coming up on the horizon. And I can assure you there is an awful lot coming up that we need to be aware of, both from a technical perspective on the charts, the fundamental, but possibly more important from a political point of view. And it really doesn't matter whether you are a trader or an investor. The next few weeks and few months are going to be pretty wild, take it from me. So you know, we're going to cover some of those elements in this session, and we're also going to look at something we've been talking about for some time but never actually got round to it, and that is non-time based charts. And this is something that David is going to cover in more detail. So before he comes back to me, and just as we wait for the US Open, I'll pass you over to David.
Thanks, darling. And oh, excuse me. A very warm welcome to you wherever you are in the world. It's early afternoon here, and a very warm welcome to you, whether it's evening, morning, or perhaps even late at night. You're more than welcome to join us, and glad you're here. If this is your first time coming to one of these sessions, we run this as a two-hander. This session we predominantly spend on the NinjaTrader platform, but Anna's got the MT5 platform up as well, which you're looking at right now. And if trading futures, true futures, is a little bit scary for you in terms of the additional margin requirements and the fact you need a specialist broker and everything else, I would urge you to look at MT5. MT5 is gaining ground all the time in terms of its popularity, not least because MetaQuotes have made some significant changes to it, which attracted it has to be said, the Forex world in particular. But in addition to that, the MT5 platform is just brilliant for all the other markets, and they don't require huge margin requirements. So you can start trading indices. You'll find quite an array of them. It's not just the US indices that typically we focus on here on NinjaTrader. You'll find things like the Nikkei, you'll find the Australian indices, you'll find the Canadian, UK, whatever it is. So they're all there. You'll find commodities. Yes, you've got gold, you've got silver, you've got oil, but you'll also find soft commodities if you've never traded soft commodities. You know, it's another way of getting into that market. And of course, there are stocks. It is in terms of stocks, it is a bit limited because of the tens of thousands of stocks available. There are generally only, I was going to say a handful, it's probably more than a handful, but I'm sure you get the general picture. But the key point is the cost of trading those markets is very small compared with the cost of trading a true futures contract. If you want to trade a currency future in its purest form, or an index future, then you've got to have a specialist broker to do that, and you have to have a sizable amount of margin in your account before you're even allowed to trade one contract. So, you know, the MT5, I can't recommend it too strongly or too highly if it's a market that you're considering in perhaps alongside Forex, or you want to try other markets as well. And it's a great place to start, I think, anyway. And in the trading parlance, relatively low risk, but I would, you know, stress the word relatively. Just going to pass back to Anna for a moment.
Thank you. I'm not going to say too much or bring up some of the links that I want to share with you, because I'm very conscious of the fact that we are, is it 21:30? I've got 21 in the next few minutes. I really, really want David to go and look at the non-time-based charts, particularly if you are a fan of trying to take some points and pips out of the US Open, and there's absolutely nothing wrong with that, but as you know, it can be hugely volatile. Goes first of all, you've got to catch up from Globex, and in all honesty, it's in our opinion, it was almost impossible simply to do it with time-based charts. We're actually going to look at a very specialist indicator that we've developed for Renko. Now, Renko is a standard charting package with Ninja, but we've taken it and we've twisted it slightly. Right, I said earlier on, this is going to be a pretty wild time between now and the end of this year, and there are three broad if you like, areas that you are going to have to keep an eye on. If you're in the UK or you're a forex trader and the British pound is one of your currencies, and obviously all the goings on with the Brexit situation is going to become ever more intense. With deadlines coming up, so obviously that is going to be very much at the forefront. Secondly, we have the political situation in the US and whether or not Donald is going to be impeached for whatever misdemeanor he is being accused of, whether it's of a personal nature or whether it's a political one to do with Russia. I don't know, but it's very, very similar to if you like, for those of you old enough to remember or know from history, the Watergate scandal, and how the market's going to react if that is going to happen, and it's probably not as you would possibly think. So that's really, really going to be, so it's politics that is, you know, is going to be a huge driver. Politics has been a huge driver anyway, but that is going to be even more significant. That's the word I said. And thirdly, as a result of the very strong US economy and the Fed and raising interest rates, despite what Donald may or may not think about that, the situation in emerging markets, we're already beginning to see problems in Argentina, problems with Turkey. Emerging markets, they are hugely, hugely significant and important in the global economy. And all, you know, this world we live in now, from a financial point of view, is so intertwined. So you know, something that happens in Indonesia or Malaysia could have a direct impact on what is happening in your part of the world. And to this effect, we're going to have to keep an even closer eye on the US dollar. As I said last time, the stronger the US dollar becomes, the more expensive it is for the emerging market economies to service their dollar-funded debt. I've got the dollar index up here at the moment. This is from this morning, and you can see here I've got it. We're looking at the R4, which is actually the 95.5 level. It's been key. It's been trying to go over this level here since we left it at about 11 o'clock. As you can see, it's had 1, 2, 3. This is the fourth time it's trying to break above. R4 in as part of the Camarilla protocol is very significant. A break above and a hold above is often taken as a clear a statement of intent for a breakout trade. So you can see why this is so important. Now, this may be given a nudge higher, because looking at the calendar, we've got the PMI, the ISM from the US, and we've got final manufacturing PMI, which will also give us an indication of what the US economy is doing. The numbers have been, as last month on the ISM was 58. The fulcrum number is 50, so anything above is taken to be an economy in expansion, and below is an economy that is contracting. So Levels, again, we've talked about this in previous sessions. Levels are hugely important, and as markets and instruments reach these levels, what is it going to take to move them over? Clearly, volume is going to be needed to be a genuine breakaway or breakout, but the driver for that is possibly some piece of fundamental news or political news. So I'm just going to move over to David, as I said, because we've only got a couple of more minutes for the open, and then, as I said, we'll come back and look at the dollar. But just do keep, if you've got the dollar index on your screen, do keep an eye out for it and see what happens as we move into towards the releases.
Thanks, darling. Should be coming up any minute on your screen. Yeah, I'm just looking over at Anna's shoulder. That's fine. That's come up. If you do have any questions, please just... Oh, gosh, sorry. Had my microphone in the wrong place. Apologies. If you do have any questions, please just drop them in the chat box. We'll be happy to answer them there. Or alternatively, I'll answer them on air, or Anna can answer them on air if they're longer questions. Sorry, I was just watching the price action. What I've actually done, I've really focused in on one particular market, and what I wanted to do was just see how that unfolds in the next sort of 5, 10, 15 minutes. We're using both time and non-time-based charts. And along the bottom here, I'm focusing on the NQ, which is the futures contract for the Nasdaq 100, and I've got a time-based chart here which is set to 2 minute up here at the top left. I've also got a tick chart alongside. I've got the Tickspeedometer running to give us our tick settings, and I've got the NQ on Renko as well. So I think just to keep things simple, what are we doing now for time? 14:28. I've got a couple of minutes. Just to keep things simple to start with, I'm just going to leave it running on the time-based charts just as we get underway. And the reason for that is really just to highlight the whole issue of when you're trading these particular markets, certainly from a volume perspective, what you're seeing on the volume profile right now is the volume that's been running through Globex overnight on the 24-hour cycle. As you can see here, it's very descriptive. You can see the highs, the lows, the price agreements, the price disagreements, and it's all very demonstrable. What will happen when the market opens at 2:30 is that all of this will be collapsed in size. It'll all be compressed because the volume that comes in at 2:30 our time, the open of the US markets, is huge and therefore compresses everything that's gone before. That's just part and parcel of trading using volume and price. There's nothing you can do about it. It's just acceptance of the fact, which is why from a comparative basis, you can't look at the first few minutes of volume and compare it with what's gone on before. You have to wait for 5-10 minutes or so to go through, certainly on the faster time frames at any rate, before you get some sort of comparative metric where you're comparing like with like. Because if you're comparing cash and electronic markets open with simply comparing it to what was going on the electronic market, you're not comparing like with like. You're comparing apples with pears and not apples with apples. You can also see here on the 2 minute that we've got a pretty tight range of congestion building on the support and resistance on the accumulation distribution, and no great surprise, as always, as the markets open up, we get this volatility almost immediately triggered. The volatility comes in instantly. It's triggered on average true range, so as soon as that metric's been met, in other words, the price action has jumped outside the average true range, then the indicator fires and it tells you, volatility is coming into the market, and we will get a huge surge in volume as that particular candle closes. There's been a lot of negativity to indices throughout the morning, largely once again driven by trade concerns, which, Anna said, the next few months, that's another of the ongoing things we have to deal with, is the constant flip-flop from risk on to risk off and back again, and interspersed with dear old Donald Trump's tweets and all the rest of it. That is just a fact of life. And until all these things are settled, it's a bit like the ongoing Brexit. Until these things start to settle down and the markets become used to what is going to be the future, then this is the sort of volatility we're going to see day from day on, from day to day, throughout the period. It's just a fact of life, and it's something we have to accept. And what you're trying to do through all of that is, through the prism of volume, try and get a sense of what the market is, where the market makers are, where the big operators are moving on an intraday basis, how the price action is unfolding in that sense, and then being patient and waiting for those trades to come to you. That candle's now closed. You can see the massive surge in volume that's come in. Everything else that's gone before has now been compressed, which is what you expect to see. It doesn't invalidate what went before. There were some really nice trading opportunities this morning, particularly in that price waterfall that broke away from the 70, 76, 60 area down to where we are at the moment, down at 28.30 odd, now moving back up to 40. That candle is just symptomatic of what often happens at the open. You get a long-legged candle, you get a lot of volatility, and is it something that's tradable? It's up to you, I guess, but what I would be looking for is I'm looking for a little bit more stability in the price action. I don't particularly want to be trading volatility in congestion. I don't mind trading volatility in a trend, but I don't particularly want to be trading volatility in a sideways price move. So that's on the time-based charts. If we hop over to the non-time-based charts, we'll start with Renko. And you've got a similar picture here. The difference between non-time-based charts and time-based charts is that you get a sense of momentum. Whereas on that time-based chart, all you will see is volatility. The price will be oscillating pretty wildly. The outcome is the same, in other words, sideways, but you also get a sense of speed in how quickly that chart is building. So the momentum of the market rather than just the volatility or the trading range. And that's why charts such as Renko, charts such as Tick are attractive, because they reveal that. What I've done with the Renko here, this is the Renko optimizer for NinjaTrader, which Anna mentioned earlier on. I've got this set on 1 minute. And what it does is, I'm sure you're familiar with Renko. With a normal Renko chart, the standard Renko chart on NinjaTrader, for example, you define the brick size, which is fine. And you may decide that it's 2 or 3 or 4, but you really have no way of knowing what is the correct brick size to set. What the optimizer does, which is in the name, I guess, is you select your time frame. So if we want to trade, we're on 1 minute. Let's say 1 minute is our chosen time horizon for this particular market. Down at the bottom here, it tells us that the optimal brick size right now is 10. So if we just click on that, we get a 10 brick size of brick for the Renko chart. And what that 10 means is actually 1, because we are dealing with a point here on an index, and that just converts to 1. It's just the way the system works. We have to take the decimal point off, if you will. So this is just a 1 brick size of speed. But that is the optimal setting right now, whereas before, when the electronic market was operating, it was a much larger brick. Now we've gone to, the market is speeding up, and we're now down to single point movements on the brick. That is the optimal setting right now for the NQ at this particular point. And as you can see, you get an immediate sense of momentum in the market. There's no tails, there's no, it's a very clean chart. And what also works really well are the trend dots. As you can see, the trend dots work very close to the price action. They reflect the price action first in terms of changes from one color to another. They support the price action, but they are the ones that change first because they are closest to it. I've also got the trend monitor running below. The trend monitor takes a more considered view. You can see here we've got these changes in color here. As we came down this ski slope here earlier on in the bearish trend lower, the trend dots then transitioned. They transitioned into blue quite quickly, back into red, then we go into gray, back into blue again. Now we've transitioned back into red. And whilst the trend monitor has certainly transitioned, it hasn't ever changed to bright blue. In other words, it's never gone from the complete array of bright red through to bright blue. So it's never made that full transition, and now we've gone back into bright red again. And it's just a key fact of, as I mentioned it this morning in the Forex session, maintaining a position through reversals is the hardest thing to do in trading. There isn't anything else, because what happens is that this is where the emotion starts to build. You've perhaps got in, let's say you've got in somewhere here, you've picked up some nice points down here, and then the market starts reversing. By the time it gets back here, this little gap of what was left of your notional profit has now been eked away. It's dwindled away, and it's getting ever closer to the point where you got in, and you're panicking and worrying, and you'd probably close out. And that's the way the market works. That's what it's there for. It's designed to get you out of strong positions. And when the trend picks up again, you're left frustrated, annoyed, cross with yourself. I shouldn't have done that. I should have stayed in. Because the staying in aspect of holding a trend is key, because it flies in the face of how the financials work in trading. Because if you're constantly being taken out in these regions, then what you're actually banking is a relatively small profit from here. Whereas what you've got to try and do is to maximize the profit that's developing down to here, because the whole business of trading is about large losses, large profits rather, offsetting a larger number of small losses. So those large wins are absolutely key to moving your trading account forward. And if you find it difficult to hold a position once you've got a good position in the market, and you get frightened out, and let's face it, every single trader under the sun does, those are the times when you need some indicators to try to help you through those emotional periods of pressure to keep you in the trend. And that's really what they're designed for. The trend dots give you a heads up of a change right at the coalface. The trend monitor takes a more considered view to try to help to manage that emotion and keep you in through the reversals, which are part and parcel of change from a primary trend into a secondary and then back into the primary again. So it works in exactly the same way as indeed on any other charts. You've got the support and resistance on the accumulation distribution here. You can see the various levels up and down the chart, which again, a key point. You know, we had a level built here of resistance. We had a floor built here of potential support. That potential support region has now been broken through. Again, you see, you get this little pullback. You think, oh gosh, you know, perhaps you got in, perhaps you might have waited here. You waited till the market's opened. You jumped in here. You thought, okay, well, I can take some points here. Then this reverses back against you. There's no change on here. And of course, you can also use this in conjunction with the time-based chart. If we go back to this is on the 1 minute. Now this, obviously, it gives you a very, very different perspective on what is going on. We're on the 2 minute, beg your pardon, not the 1 minute, this is the 2 minute. We have the volatility, second volatility. We've still got volatility, so we've got volatility on practically every candle except this one. Nevertheless, it's very bearish at the moment. Lots of volume coming in, and we've broken away from this very strong corridor of support and resistance, which was built up on the 2 minute chart. So using the time-based charts with the non-time-based charts is a very classical way, whether you use the Renko to actually give you an entry signal or whether you use it as a helping you to stay in signal. That's, you know, a personal choice, but it's a great combination to consider. And a lot of people just use the Renko chart for trades, certainly for intraday scalping on an index or commodity or stocks even, but whatever it may be. But you may find that a blend is your preferred way. That's what we tend to do, what Anna tends to do. We use them in combination with a time-based chart. So it's not just purely trading on a non-time-based chart. It's actually using it to help to give you confidence to stay in. And the nice thing about the Renko is it is very noise free. So it's very clear what is going on when you get these little pivots forming, when you get the little pullbacks, the little reversals. And it's also very nice in the sense that with the Renko, because you're dealing with bricks, it builds very solid lines when it creates these support and resistance regions. So they're nice and clear. There's not much guesswork involved in terms of where we're finding support, where we're finding resistance. It's a very classical, I suppose it's like an engineering chart. It's almost a brick-like in that way. If you then go over to the tick speed, let's go to the tick chart itself. This is on, let me just go to the tick speed first. The Tickspeedometer in a way is exactly the same as the Renko in the sense that when you're trading a tick chart, you have no idea what to set that tick speed to. You might guess it, you might, someone may suggest it, it may be in a forum, whatever it may be, but you have no real idea. And every instrument has its own character stamp, its own personality, its own characteristics, and they will be hugely different. The tick speed settings for the ES, for example, which is the futures contract for the S&P 500, are massively different, massively higher than for the NQ, and the NQ is much higher than for the YM, which is the Dow 30. So it's really having an understanding of what the setting is. You can see on the left here, this delivers what you need to set the tick chart to. And right now it's 1597. Now before the market opened, this was running at something like 55. So it gives you some idea of what's going on. What it also tells you is when we've got big activity in green, we're flip-flopping here between fast and slow, but you can see the areas of activity they're highlighted. And also with the Tickspeedometer, it blends volume price analysis with trading a non-time-based chart, because on here we can see the volume, we can see the price action, and that gives us an instant appraisal of the VPA relationship. Then we just head over to the tick chart itself. I'll just put in 1597, which is very different to what we've got up there. Excuse me. That's just loading up. I'll just put some, let's just pull that over a little bit. There we go. Widen it up a bit. There we go. Let's put some more data in there. Let's put 30 in. Okay. There we are. Right. And that you can also set, sorry, back to the, where are we? Where are we? That's the tick speed. NQ tick. There we go. Right, now we're loaded up. Now we're running on a 1597 tick chart here, as opposed to what it was prior to that, which was 55. And that's the huge difference that you can see instantly from when the market was running on Globex electronically, and now we're running with both markets in parallel. We've got the electronic and the cash markets running together. And that's the huge difference in terms of volume, and also the huge difference in terms of obviously tick activity and the tick chart required to trade that market at the optimal setting. Other than that, it's exactly the same principles apply. You've got the dynamic accumulation distribution up here with the various support and resistance levels. You've got the pivots up here, which are helping to define when you're hitting areas. And also you've got the trend monitor running at the bottom here. And as you can see, once again, we run into these areas of congestion where the market might reverse, it might turn against us. It hasn't transitioned. We're now holding steady in bright red throughout that phase of price action. And again, the tick chart is another where you will see the speeding up and the slowing down of the market. Because every time a candle is formed, it's formed after 1597 ticks have gone through the market, whether that happens in a fraction of a second or a few seconds or a minute or whatever it may be. That is what dictates when that bar will close. And on the Renko, it's the bar will close or the brick will close when the particular number of index points for the NQ have gone through. Let's just see where we are here. Now we're starting to see we've got some support building here. You can see here the trend dots. We've gone into grey, so we've gone into a congestion phase. Now we're starting to transition into blue, possibly. The trend monitor itself has transitioned through to a darker red, so we know we're in a transitional phase. If this is going to be a true change in trend, then what we're looking for is this to transition through, obviously, to a bright blue and a reversal in market sentiment. We've got a couple of pivots coming in, so just confirming that we're in congestion. We've got a pivot low, pivot high, pivot high. That's just helping to define the area of congestion that we're building right now. If this market is going to carry on lower, then we've got to take out this level at 75.90. And if we do, then maybe we're going to see the next leg on down in the move. Yeah, I'm just going to transfer back to Anna there.
While David was doing that, what I've been keeping an eye on the dollar index, and in fact it's rather nice because I've got a Renko for the dollar index, I've got a time chart, and I've got 2 time charts. If you recall, we were looking at the dollar index and the significance of the 95.51 level, as we can see here. It's had how many? 1, 2, 3, 4, 5 attempts. It actually has managed to go through, but it's got to close above there with some decent volume and then carry on higher. So obviously we have a congestion on this hourly chart, and it's a lot of it is going to be influenced by what is coming ahead. I think at 3 o'clock we've actually got the ISM coming up. So you know, as a trader, as a day trader, no matter what you trade, you have to learn to put together this the sort of jigsaw from the technical picture. Why is the the market that I'm looking at, why is it doing what it is doing? What is it waiting for? And then obviously, as I said, keeping an eye on the fundamental news. But it's also the importance of multiple timeframes, because this is the hour, and if we look at the 4-minute chart here, if I just expand that, this is the congestion phase that we've been looking at. But what the faster timeframes will also help you with is, where are the next set of significant levels? Here we are with 95, 50, 54, and then we've also got the volume point of control at 95.46. This is where we have volume, price, and time combining. So this can provide either a very strong platform of support, which it did to this here and at this point here, but it can also put, if it goes the other way, it will provide a strong ceiling of resistance. And to the downside, what are we looking at? Well, we've got 95.39, 95.40. So this is the range that the dollar index is trading at the moment. And how that translates into the Renko, I set it up without showing you how to do it, because I'll do that next time. Let's have a look. Where's my Renko gone? Lost it. Oh, I've lost my Renko. There. Nope. It is here somewhere. Just bear with me. I've lost it. I can't believe. Oh, here it is. Oh, there it is. Sorry. Right. And this is how it appears on I've not actually given it a fixed value. With the version that is on MT5, you have 2 options. You can give it a fixed value, or you can allow the ATR to kick in and set its optimal value. And what we're seeing here is we've obviously had from this reversal point here, we've got a nice up, we've got a little pullback, then we had this nice trend high, and now we're into this congestion, which could be distribution. We don't know. We'll just have to wait and see. And I know I haven't done them this time, but this is part of it's a section of a typical price cycle. If this is the first time you've come to one of our sessions, we do a lot about price. We've already covered the price cycle, C states, Wyckoff's second law. The best way to catch up is just to go over to our YouTube channels, either my own or Quantum Trading, and just watch the first 5-10 minutes of those sessions, and that kind of will fill in the gaps for you, as it were. But I just wanted to bring these three together. I'm sorry I can only show them on, it's all a bit cluttered at the moment. You'd obviously have more screens. But so we have a 4-minute chart where we have a beautiful picture of the congestion that we have seen on the 1 hour chart. So we're kind of benchmarking 1 hour with our 4 minutes here, and the extent of this congestion following this nice move higher for the dollar. As I said earlier on, the implications of a strong dollar, it's not just for the US, it is global, in particular for emerging markets. So let's see what happens. We're waiting. We've only got another 5 to 6 minutes to go for the ISM, and let's see how these levels hold up. And it will also have a direct impact, obviously, on what the indices will be doing as well. And then I'll just put up the links that I think you may find useful for more information. Very easy to digest information on the sort of background that you're going to have to keep an eye on, certainly in the next few weeks and coming months. And again, the key level that we have here on the hourly chart. So the importance of levels in multiple time frames. What are we seeing in terms of a price cycle? You know, the price cycle that you see in one time frame as opposed to another time frame. And as traders, most of the time, we just have to sit and wait and just see what happens. As old Jesse said, what did he say, David? He made more money when he just sat on his hands and didn't try to do anything. Poor old Jesse. There's a fantastic book of his that I actually discovered the other day, and when I find it, I'll put it up next time. It's absolutely brilliant. I think it's been put together by somebody else, but it kind of pulls his not just the quotes that you find online, but his actual work, and it's fascinating. And you'll be pleased to know he used volume. So there we are. Right, can I pass? Do you want to pass back to you on the Nasdaq? Is it? It's down 55 at the moment, so it's. I think we're all waiting for the ISM, but it's fascinating to see how all these elements come together on our charts. Let me just put that back down.
I've still got the Renko up there. We'll just see if that's slowed down a bit. Let's go back to the 1 minute, just see what comes up. 19, there we go.
We've got 6 minutes to go.
No,
it's rather long time, isn't it? Oh, I moved over too soon. Sorry about that.
That's okay. It's all right. Put some more data in. There we go.
Right, we had the. Let's have a look. Actually, we've got 2 pieces. We've got final manufacturing, which came in slightly better, but this is the one, isn't it? The ISM.
Yeah, it's the ISM. Just see what's happening on the time-based chart, and obviously given the news coming up in, when is it? A couple, 2 or 3 minutes. We'll see what happens in terms of volume as well. See what the Tickspeed is running at the moment. Slowed down a bit. We're on 610 now. Just move that over. A little bit of positive sentiment coming in for the Nasdaq ahead of the news. 5 minutes to go, but probably like to stay in congestion for the time being. Trend dots transition, you can see we've transitioned straight through to blue. but nothing on the trend monitor as of yet to suggest we're going to see a reversal in trend at the moment. And the red here on the Tickspeedometer, you can see the volume here has just dropped away. Activity is dying away at the moment, but it'll no doubt surge back into green once the news is released. And it's always interesting to watch it on a non-time-based chart when news is released, and you'll see how quickly the candles or bricks form as that news comes out. Go back to the Renko. And you can use the Renko on any market. It will automatically pick up whatever is the appropriate brick size, and you can set it manually. You have both options, so you've got the option to set it manually if you wish, but obviously the optimized setting is the one we would suggest and recommend. But you do have the option to set it manually. But you can set it on any chart you wish, any market. If you set it on gold, for example, then the brick sizes will be quoted in dollars per ounce. The same with silver. If you set it on oil, then it'll be quoted in dollars per barrel. It'll set the appropriate brick size setting for you according to that particular market instrument. And the same on stocks, it will be in cents, and so on and so forth. Only a couple of minutes to go now. Just have a look at the dollar index over here. It's just going sideways. This is on the 5-minute. It's the dollar index below, and this is the euro dollar above. As you would expect, they're mirroring one another. See what's happening on the yen. The yen's been pretty much buying, not strongly, but it's certainly been buying since this is 7 o'clock. Basically, you're looking at pretty much an entire trading day here. This is 7 o'clock our time, so that's European Open, 8 o'clock London. Here we are over to New York for us, 1 o'clock open, and we're trading over here at 3 o'clock. So it's pretty much an entire session. It's been ticking up, it's hardly been raging up, but it has been buying of the yen so far. And in terms of the euro, let's just have a quick look at the euro index. It's mildly bearish at the moment, not strongly, but ticking lower. And just to pick up on the relationship between volume and price, and again, as Anna said, using multiple time frames, but the same approach applies whether you're using particularly with tick charts, for example, where you might use an array. I will use, for example, when I'm scalping, I'll use a 1, a 2, and a 3-minute time horizon. So I'll have 3 time frames, traditional time frame charts, but I'll also have alongside those the 3 tick charts as well, because they all reveal something different about a slower or a faster time frame with the associated indicators. I think probably just is the market. Is that coming in? Yep, here we go.
Oh, wow. About 61. Wow.
Was it stellar?
I'm not sure it's going to do much.
There's the Renko.
Patience.
Okay. Trend dots have already transitioned through to blue. Trend monitor has transitioned through to darker red. If this is going to follow through, then we want to see this transition through to bright blue in the fullness of time. Excuse the pun. Tick speed's picked up a bit, not hugely. 987. Just tick that up. Okay. And we've seen the transition here as well. So we've gone from bright red in the down. Sorry, I had a frog in my throat. Down in bright red, into darker blue, and now through into bright blue. And now we're starting to hit this very strong level of potential resistance overhead, which is literally above us now, just beyond 76.15, 76.16 maybe. If it moves through there, then on up to the next level. And this is what I mean about having multiple charts. You would have this. This is a 1 minute equivalent. You'd have a 2 minute and a 3 minute, or you'd have a 1 minute, a 3 minute, a 5 minute, whatever your preferred as a scalping trader. Or of course on NinjaTrader, you can go down to seconds. If you want to run these on literally super fast, 15 seconds, 30 seconds, and a minute, you can do, if that's your preferred approach. It doesn't matter. The concept, though, is that you're using an array of time horizons across your chosen trading time window. Let's go back to the Renko.
Not going to do very much, the Nasdaq.
Doesn't look like it.
Yeah.
Tickspeed is still running relatively slow, not a huge pickup. You're looking at the volume. Volume on that candle was fine. You've got a wide spread up candle. You've got decent volume under it. And as I said earlier on, in here from the open, which was 2:30 our time, you are comparing like with like. So you are comparing apples with apples. You can't compare this candle with something over here. It doesn't make sense. But you can compare it with, this or any of these other candles to give you some sense of whether this is a genuine move or not within the session. And that's certainly supportive of the price action. There's no anomaly there. We had a minor pullback. The volume here is okay. Now we're starting to see the volume move higher. Let's just have a quick look over at the Renko where we had, oh no, sorry, it was on the time-based chart. We had that. There we go. That was the level of resistance that was holding us up. That now appears to have been breached. If that closes there, then we're on possibly up to the next level, and where no doubt another level will have built at some higher region on the chart. And again, it's all about looking across the time horizons to see what is available next, what is available, what's coming up at me in my slower time frame. This is telling me one thing. But I need to understand what is coming up in a slower time frame and where those barriers may be, where those obstacles in the path may be, so that I can judge it accordingly. Slow down again the tick speed, but we're running in red. This market's not raging higher, but it's. And you've got to remember that when you're trading an index like this, 5 points here is a lot, 10 points is a lot. On the ES, 1 point is a lot, or 2 points is a good return. On the Dow, if you're trading the YM, then you're looking for 10, 15, 20 points. It's all relative according to how much each of those points is worth on the contract. Some of them are big, some of them are small. The YM, you start at $5, or you can go to the big Dow at $25, etc., and work your way up. We haven't seen this transition yet. This may go through to dark blue, or it could go through to bright blue. There's nothing in the playbook that says it has to go through the whole sequence of color changes. It's not a traffic light signal that automatically goes from red to amber to green and back again. This can miss a step. It can go to bright blue. It may go to dark blue, or it may not. That's just a fact of the price action. And looking up and down the chart, then obviously you've got these pretty strong levels which are going to come into play as potential resistance as we move higher in the reversal. Moving about a bit the actual ticks. Move back to retest that level again. The trend monitor is remaining blue on this particular time frame, or rather the tick chart, down to 610 now. Let's just step it down to 610. And you get, as you would expect, you get a different perspective. You can see the buying that came in at that level. You've got a nice hammer there. You've got decent volume under it. You've got some more under here. Then we move up. We've got decent volume, but a wick to the upper body. We've got decent volume under this one. We're seeing a pullback on this one, but the volume's not huge on the pullback. So maybe the selling pressure is starting to diminish a little bit. Massive resistance level up here, built through this extended phase here of price sideways price action. And you can see the transition here. This looks as though it may, if it does continue on upwards, then we've gone through the spectrum here for bright red, dark blue, and finally into bright blue if the trend ultimately develops longer term. I'll pass back to you, darling.
Yeah, sure.
Just going to pass back to Anna.
Brilliant. If I turn my microphone on, everyone can hear me. I've got the dollar index because we had the ISM come along, but this combination of timeframes and looking at the price action and volume in this way, you can apply to anything. It just happens to be the dollar index because it was pertinent. We had a news release that was going to affect the dollar, and also it's such an important item of it's such an important release. All the PMIs come out at the first week of the trading month. Right. Basically, this is what happened in the 4 minute. This is on the release itself. As I said, this is the level that, let's go back to the 1 hour, where we had our R4, this strong resistance based on Camarilla levels, and we needed a close above. And as I said, it can be taken as the start of a breakaway. Now, as I said this morning, breakaway trading, breakout trading has a really bad rep in amongst traders for lots of different reasons. But honestly, given that most markets are in congestion most of the time, we've all got to get to grips with congestion and breakouts and breakaways. Reversals are great, and you can use reversals. You've got your hammers, you've got your shooting stars, you've got a combination of that with dojis, gravestone dojis, and hanging men. That's fantastic. But most of the time, if you look at the charts closely, what do? They spend an awful lot of time moving sideways because either they're waiting for something, or a piece of fundamental news, or the move that has come off a reversal has actually come to a pause point, and you've got either accumulation or distribution. So we've had R4, that's gone through, seems to have closed through it. But at the moment, as you can see, nothing moves in a straight line in trading. So it's just because something has gone through, we know that's now going to provide a fairly strong platform of support on the hourly chart. It may even come back and retest it. But in retesting, we know, as I said, it's what is the strength of that support platform, which used to be resistance. And then the other question we need to ask is, well, if it's going to carry on higher, not straight away, it may move sideways, where is it going to go to? Well, we have a level already for us. It's a 95.80. The Camarilla that we've developed for MT4 and 5, I asked David does all the development work and works with our developers. I asked for 6 levels. I didn't just want the 4, which is why we've got these 2 additional levels, because one of the things we have to try and establish as traders, not just our favorite trading setups, what is going to be part of our decision matrix when we decide to enter a trade. Then we've got to stay in the trade, and then we've got to have some idea of where we want to get out. So having levels will do that for you. They'll help to define where the price is potentially going to go. some people use moving, some people use the 200 MA, you know, if it hits the 200, I'm out, you know, that's up to you. We don't say, you know, do it this way, do it that way. As long as volume price analysis is part of your foundation, you can do whatever you like, either with proprietary indicators or standard indicators. But you could be looking at that and you think, well, why is it, you know, why is it struggling? Well, we just have to look back to our 4-minute chart here, and we can see the breakaway here from the 95.54, but it was accompanied with volatility. Not surprising, because we had an important item of fundamental news. What that has done, it has triggered we have a volatility indicator based on average true range, because that move in that candle in this time frame is outside of its ATR. Inevitably, with volatility is the compression and expansion of time. And what has happened also, it also has momentum, but it's we don't know where it's going to go, other than with the VIX. When you see volatility on charts, you don't really know, what is going to happen. All we know is that something has triggered the volatility. There has been momentum. There could be a lot of volume as well, but what the indicator tells us is this has happened at this particular time. Now, what we can then deduce from that is one of two things will happen, and generally the first of these is more common than the second, and that is the price will revert inside the spread of the candle, possibly to reverse, maybe it will congest within the range of that the candle, or it will simply, it's a pause point, it's had this explosive move, it needs time to, regroup, calm down, and then it will continue higher. And this is why you have to use more than one time frame. So if you were looking at the hourly chart, you see that nice little break. You say, oh, that's nice, it's gone above the R4. I really like that. I'm looking at 95.80 to the upside. I've got a strong platform of support, and also support and resistance levels. They help you with your stop placement. Where am I going to place my stop? And if you have these nice levels, fib levels, people use those as well, whatever it is, you know why this is happening, because on the 4-minute you've had this volatility triggered. So you say, okay, I'm going to be patient. It hasn't gone back to the 95.50, 54 where it broke away from. I know it could possibly retest it. It just gives you the confidence to stay in and hold. And then when you look at the Renko, where you don't have time and all it is the price action, it hasn't even registered. All it's done is you say, yeah, it's gone beyond the 95. These levels will never be, they won't be exactly the same on the Renko and the different times, but it's around 95.50, 51, 52, 53, 54. But it's broken away. This is the congestion period, and now it's looking to move higher. The momentum has slowed. There's not so much energy in the move, but it doesn't look as though it's going to want to reverse any time soon. So Renko, non-time base, with 2 time charts, the faster time chart and your benchmark chart, we know exactly where this price is looking to go. First step is it has to clear the volatility candle, which I think if I can get the values up, let's have a look on that one. What's the high of that one? With MT5, it's quite hard sometimes to get the values of the individual candles, so you may have to eyeball. Let's have a look. 95.64, 95.70, David? What do you reckon? About 95.70, there it is. So we'll see what happens there. Right, the implications of a strong dollar. I just want to bring over some things that perhaps you'd like to go and take a look at. First of all is the implication for emerging markets. They also have the potential to cause an enormous problem in the financial markets generally. As the dollar gets stronger, interest rates will keep rising in the US. As I said earlier, the cost of their borrowing is going to become higher, putting more strain on their reserves. So something to watch. I also mentioned about Donald. Has he not been tweeting yet? No. What's the matter? He's been very quiet lately. Basically, this is a really nice little article I found on Market Watch. I'm not going to go through it. There is this threat of impeachment. It's not rattling the stock market generally. I know we've seen some pullbacks, but generally speaking, we know investors and markets are still relatively complacent. Why do we know that they're complacent? Well, we only have to look at the VIX. It's down at 1377. That has to be significantly higher for some serious fear to come into this market. But it's something we have to be aware of. And as I said earlier, it has a lot of parallels with the Nixon era. I know Clinton was also, I think he was impeached, but I don't think he was removed. I think it was, I can't remember the ins and outs of that, but that's mentioned in this article. And I did also read that actually, that if he does step down, I think the vice president, is it Mike Pence? I think the market is quite favourable to him. The other thing to keep an eye out for is the relationship between the Trump administration and the Federal Reserve. Obviously, the Fed is on course for raising rates and all the implication that that has for a stronger dollar. So, you know, lots and lots to watch out for and be aware of in the coming weeks and months. But hey, you know, it's this business is inherently unstable. I think you've gone bright blue on the Nasdaq now, haven't you, darling? Yeah. Let me see on the investing. I keep an eye on it over here. The Nasdaq, it was down minus, it was down 60 points. It's now only down 27. So obviously it is clawing its way back. It's actually quite interesting because rising interest rates don't really in the long run, don't do stocks an awful lot of good, because obviously the cost of borrowing increases, and that's when you get this rotation back into bonds, as it were. So that's, you know, that's a topic for a separate webinar. Right, I think I'm going to stop there. Is that okay, darling? Yeah, I'm just going to go back to David, and then I'll just do a quick wrap for you. I'll turn myself off.
Very quickly, I've just switched over onto the YM, which is the Dow future contract. We're on the September contract here, and as you can see here, a very similar picture to what we were looking at earlier on the NQ. This is the Renko applied to that particular contract. We've gone through the color phases, and we've gone through into dark blue, and now we're coming out the other side into bright blue. Trend dots changed some time ago. This is what's going on in terms of trend monitor. And here we're running on 10 index points. So each of these bricks, this is an optimal setting for 1 minute time frame. This is delivering us 10 index points on the YM, which is at $5 a point. If my maths is not incorrect, it's $50 per brick. So it's very nice. Thank you very much. And on to the next one. I'm just going to pass back to Anna and say cheery bye for now. Hope you've enjoyed it. And I'll pass back to Anna, and she can run through the wrap up, and I will see you again next week.
Just forget a quantum trading education. Those are the indicators: MT4, MT5, and Ninja. You can just buy one. We've got discounted bundles, or we have a complete package. It's for a lifetime license, all free upgrades. There is a 7-day money back guarantee, and you get 24/7 support 365 days of the year, as you can transfer from platform to platform. If you do invest in the full package, if you've bought one or two before, obviously you get a credit, but we do add all future indicators. They are added for free. The Renko one, the optimizer, that's really a very recent release. It's only the last few weeks. So anyone who has the Ninja package, it will automatically be added to their list of indicators. As is the Camarilla for both. We do have it for Ninja as well. MT4, MT5, 894, and Ninja 1197, and it's available to purchase on the Easy Payment package. Yes, I do forget, I haven't got a slide on it. In the Ninja package, which is what we also have, we have a package called the Essentials, because actually the 1197 includes all the Forex specific indicators. So we do have a package that excludes those, and that is less. And I'm going to put my hand up, hang my head in shame. I can't actually remember how much it is. It's just under $800. It's called the Ninja Essentials, and it's all the indicators apart, with the exception of the currency the Forex specific one. So if you are interested in trading futures, stocks, commodities, that is the package that you need to look for. And I will put a I'll put a slide up next time that we have it here. But if you, this is where we are at the moment. We're actually broadcasting from this space. This is actually our Forex education program. This is the price for the program, but it includes the suite of indicators. It is at the moment Forex specific, but we will be putting one together later on in the year. The program for Forex is video podcasts, there are downloads, and we have a group called Trader Chatter. But if you want more information on the education, it's quantumtradingeducation.com. The indicators is quantumtrading.com, or you can drop me an email at anna@annacooling.com. Actually, there is help desk. If you can email David@quantumtrading.com. He handles all the indicator queries, issues, etc., etc. But if you've got any other question, you're more than welcome to drop me a line. Is there anything else you want to say, David, or is that it? No, that's it. Lovely. Thank you so much for coming along. I hope you enjoyed it. Oh, and Dave says there's another 20 points coming in on the indices, which is great. So enjoy the rest of the trading day. Enjoy the rest of the week. Do keep in mind what I've said, and it's going to be a lot of fun in the coming weeks and months. And hopefully we will see you next time. Take care. Bye.